All right, let's talk some big picture. Collin Martin here for the Bond Take, director and fixed income strategist. Mike Townsend joins us as we also continue our policy discussion. Afternoon, guys. This is a tough one today because it's like Powell kind of stole the story a little bit, but it's still kind of been like the Trump story. Get us going on the Powell stuff first, Collin. Did you hear anything notable today that maybe sounded more open to pausing?
Yeah, he certainly sounded more open to pausing. I think we'll still have to see how the data comes in over the next month or so. But the commentary that Powell provided was that it is going to be a bumpy road, and it's in line, I think, with other commentary we got from officials about what the path will eventually look like. But he seemed open to a gradual approach here, and that's the key term. And the markets really went with that, where we saw two-year Treasury yields jump by 5 basis points or so, and we saw the implied probability of a cut next month fall from almost 80% down to just above 60%. So it's still more than above 50% right now, but it is a noticeable drop based on what Powell said. So as we look ahead for the next month or so, I think if we were to get a hotter than expected PCE print, which is possible based on this morning's inflation data, and then if we were to get a really strong jobs print for November, I think that could tilt the Fed to a pause in December. But again, it depends on the incoming data.
Okay. The pause and the patient approach kind of seems like we always knew that was going to be the case. But then when they actually talk about maybe pausing or being more patient, it seemed the market kind of wakes up a little bit. I mean, bonds are a little changed, but they did flip. We're only 10 bips down, but we were getting a nice rally earlier, Collin. So it's pretty notable reversal.
No, it's a notable reversal, but the way we're looking at it in the, let's say, weeks and months ahead is what does the upside look like? We saw this big jump over the past few months, or I guess just 2 months really, based on stronger than expected economic data. And then we got the additional jump after the election based on expected policies that should be inflationary. But a key point, and this is something Powell made in his speech today, is that we don't know what the impact will be of those policies. We don't even know what those policies actually will be. And the Fed can't worry about that right now. So if we look at what the upside for Treasury yields is, I mean, maybe it's a little higher. Maybe we can see things flirt with 5%. But in the here and now, we're seeing inflation that's sticky but not reaccelerating. And we're seeing a labor market that's softening but not necessarily weakening sharply. So I think that makes the case for just range-bound yields in the near term.
Okay. All right. Mike, as the managing director of legislative and regulatory affairs, you think you're going to be more on the regulatory side? Because where's the legislation? It seems like we're just letting Elon Musk kind of run by proxy right now. What's going on?
That's right, Oliver. I feel like I'm drinking from a fire hose right now. There's so much news coming every couple hours. Someone new gets named to a position. So it's quite a time right now. But, I really want to pick up on something Collin said, because I think that it's really important for investors to realize how long some of this stuff is going to take. I mean, companies want answers that they're just not going to get around things like tariffs, around deportations and immigration policy, around taxes. Tax policy is going to take months and months to sort out, from plan into actual legislation that can pass Congress. So, companies are going to wish that they had answers to these questions that they're just not going to get over the not only over the next 10 weeks of the transition, but well into 2025. We're going to be sorting out the details of this. And I think that's going to be hard for companies to plan around.
Okay. Is there any way to lay anything in motion right now from the investing side? I mean, there's some big moves happening to the downside, to the upside, that the market feels very convinced about. What will be the timeline that some of these pieces need to fall into place to actually know what's lasting or not? Mike, how much does a traditional election cycle and inauguration cycle work here?
Yeah, you're in this kind of odd space, right? You've got about 10 weeks until Inauguration Day, and typically markets do well in that period between Election Day and Inauguration Day. I think some of that is just driven by the fact that the election is over and this big element of uncertainty that's been hanging over the markets for the last few months is done. We had a situation this time where there was an anticipation that it would take a long time to sort out, that there would be legal challenges. We just didn't have that. And I think we saw that certainly last week in the equities market, that kind of reaction. But now we're in a period where, there's lots of plans being laid. And I do think the Trump transition team is much better than it was the first time around in terms of moving things quickly, laying out plans, getting things ready for day one. But day one is 10 weeks away. And then when you're talking about taxes and you're talking about some of these other things, moving legislation through Congress, nothing happens fast. So you're talking, probably second quarter before you really know on where some of these things are going. So I think it's going to be a while. Washington's a slow place by nature, even when people want to move it fast.
Right. Well, they are trying to cut a bunch of people along the way to maybe eliminate some of that red tape. The last point, Mike, is there anything that you see described as a so-called Trump trade right now that looks particularly out of line? Like, is there any policy that it seems people are baking in that's going to be the hardest to get through? Like, whether it's, for a few examples, Bitcoin on the balance sheet has been like a possibility, or whatever they have to do with, crypto stuff. The other one would be actually tariffs, right? Like, is there anything that stands out to you as like the most unlikely?
Well, to me, it's more the assumptions about how fast things are going to happen. Look, tariffs can happen pretty quickly. You can do executive orders. But even in the first time around, when the Trump administration came in 2017 and put tariffs on China, that had to go through a process that took about 7 months to actually get those into effect. So some of that's going to happen. Like I said, I think taxes is going to take a while. I do think the crypto industry is right to be energetic and optimistic that they're going to have a lighter touch from this administration and from the incoming Congress. But again, that's also going to take a while to actually come to pass. So I think patience is going to have to be the watchword for a lot of investors going forward.
Okay, point taken. There it is. Thanks, guys.